Hi guys, I'm Prashant A. Bhonsle. I am the founder of Kuhoo Technology and Kuhoo Finance.
India believes that every citizen has a fundamental right to education. But actually making this happen requires more than just building education infrastructure. The country also needs to enable access to finance to pay for world class education. Kuhoo is a fintech startup that is solving this problem at scale by using technology. They are in the business of lending to students for their education, and while there are plenty of companies giving loans to students who are joining Tier 1 colleges in India and abroad, Kuhoo is catering to the long tail of students beyond just Tier 1 colleges. In this episode of the Founder Thesis podcast, your host Akshay Datt talks to the founder of Kuhoo, Prashant Bhonsle. Prashant is a veteran of the lending industry, having a track record of building up HDFC's student lending business with some enviable numbers. This conversation covers the evolution of lending in India through Prashant's own multi-decade experience and offers fascinating insights about using first principles to disrupt the traditional way of doing businesses. Stay tuned and subscribe to the Founder Thesis podcast on any audio streaming platform to learn about using first principles to disrupt businesses.
I got an opportunity to work with Pepsi. Uh, and so from pharma, by stroke of luck, I got an opportunity to work with Pepsi and I worked there in sales and distribution, a little bit of marketing, and I moved to Pune then. So, and then worked very closely during the cola war was happening, the peak
Oh,
96.
okay.
What
Nothing official about it. You were
nothing obvious. In fact, that phrase was coined by the head of marketing. Vibha was there, and she moved to Palo Alto after that. And so, as part of that period, the peak cola war between
yeah.
Coke and Pepsi. And one of the best experiences of my life. I was coming from a small town, a middle class family, never went out so much. And then I was out there now working in an immense, fast moving, high profile, heavy talent density. Pepsi used to hire from the best colleges across the world.
You were at the Gurgaon head office.
I was in Pune actually, in the market, and rest of Maharashtra and all that. And then worked there for about a year and a half. And then my mother, who was now missing me, had never gone out. So she was not keeping well. So she said, "Why to come back? I want to spend some time." So when I got back to Indore to work with Telecom, actually, at that time, Telecom was, telephony was coming to India. And so I started working with RPG Cellular. They had the license of Chennai and NNT, which became now, so from pharma to FMCG, now to telecom, and then did all the startup kind of space there. There was no office, and we were setting up BTS towers and all that. So did radio frequency and set up the system, and then all of those things. So did that for over 2 years, and then I moved to Gujarat with Canon India actually. So I worked there for about 5 years. Then one of the best experiences again from
That was like selling through the channel.
it was yeah. So it was through channel, through direct combination of distribution channels. So I was the head of Gujarat for Canon India. I got promoted very quickly. And then I moved to within Gujarat. I worked there for 5 years. So then I moved to after 3 years. Then I moved to Bombay. Then I was called to Bombay to channels IDC, like you were saying earlier. It was direct plus channel plus service operation. And then so a lot of engineers on service side and sales account manager, key account managers, and so on and so forth. And then Bombay spent another year or so. And then I got called through some common contact. ICICI Bank started going very aggressive in retail finance in India. They were changing that. Those were the early days of ICICI Bank, 2001, 2002. And Mr. Kamath had his vision of changing the landscape, which he eventually did. Joined the banking and financial services. And since then, I've been here, banking and financial services. But ICICI was the first banking and financial services. I joined ICICI Home Finance Business as the head of business for Gujarat state. And then I very quickly, I think our team performed very well. We grew by, I think, 5-7x of what they were doing in 1 year. And then I was brought to Bombay and then given much bigger.
How do you grow home finance portfolio? Like what would be like tying up with real estate developers that when they sell, then you
so correct.
loan gets
So,
bundled, and then through the branch network, like customers
so you
selling
open
up, selling.
yeah. So ICICI was one of the early adopters of third-party distribution and financial services. Till ICICI, it was a branch-driven model in banking and financial services in India. Either you walk into a branch or pretty much the branch actually till then. And then ICICI brought in this concept of third-party distribution, which is DSAs and direct selling agents and dealers and all that. I think that became their strength, and that's how they could quickly grow very fast and much faster than both the market and the competition. And that's how we took a lot of market share from other players like established players like HDFC, SBI, and all that, right? And kind of much abused word, but kind of disrupted that market largely. So you're absolutely right. The sourcing channels were developers in particular areas, catchments, and then what they used to do was brilliantly done by us. Actually, they would actually evaluate developers completely, very thoroughly, and they will then start approving the project upfront. And that's how the project approval started. They would approve project, do the legal technical of the project, and then let's say this is kosher and any customer who buys here will not face problems. And that is how we are open to lend to those customers who are buying property here. And that's it.
Turnaround time would
Much faster. Much faster because now every loan you're not doing the same legal technical valuation, so on and so forth. That happened and the processes were very good. I should say with the early adopters of technology also. So lot of Six Sigma. So first time I heard and implemented and learned about, I was trained for Six Sigma and all that, and we implemented that very, very rigorously. So I spent about 6 years, 3 years, and then I was given one of the dream projects that Mr. Kamath had at that time of cross-selling to the same customer. So over the years, they realized that ICICI was growing at a scorching pace, acquiring a lot of customers in different products, and then realized that if you are acquired, let's say, a customer for home loans and you've sold an ICICI Bank home, if you are acquired, let's say, a customer for home loans and you've sold an ICICI Bank home loan to that customer, and that customer now comes after a year, 2 years, 3 years, comes and buying a car and an auto loan, right? Then you would go through, and their strength was third-party distribution. So you would go and give the same pay through your nose to the dealer to acquire the same customer again, all over again, right? While the customer sits in your records and databases and all. And then we realized there is a cross-sell opportunity.
And these third-party distributors are essentially like a boiler room operation thing where they are people sitting and calling and calling.
Yeah, so different type of third-party distributors. One, of course, like in home finance, there were developers who became, so the people who were the suppliers became the point of sales. They owned the property they were selling and they would enable the financial because it improves their business. Because if there is a loan available for the property, there is higher chances that the property will get sold faster. Similarly, there were third-party distributors who were not suppliers, who were not developers, but they had the competence to run a sales operation. So what they would do, and they had a catchment and they were running some of the business. So they had a customer database and all that. So they would reach out to that customer and say, I have partnership with this builder and I can get you the loan. So they become the conduit. So between the supplier and the financier, and those are called the direct selling agents. So those, and similar thing in auto loans also. So there are dealers who sell cars and then they become the enablers of financiers. But also there are DSAs who will go to these dealers and say, I can get you these loans, and then go and acquire a customer and then go and get this. So these are different types of dealerships. So then I was part of the team that built the first, so to say, cross-sell model in India for for existing customers of any bank. So we started the first half an hour loan, which has become now 10-second loans, exactly same model, right? During early 2005, 2006, that I was part of the core team, which is the credit scoring in the India very nascent stage. So we were doing evaluation of the existing track record of customers of ICICI Bank, whether they are liability customers, saving bank account, or home loan customers. How have they been behaving, and then score them and then say, oh, they are good customers and we should offer them one much lower process intensity and all. So that's where they started now giving pre-approved offer to if you were a ICI. So I spent a lot of time there. It became a big model, large team, few thousand people and all that. And then I got the first opportunity to taste a little bit of entrepreneurship because the approach after about almost 6 years in ICICI Bank from in 2000, early to mid 2007, I was approached by two brothers who had gone to US for their higher studies in late 80s, early 90s and spent about 10, 15 years there. They got out, they started doing well. One was and they had started that one of them had come back in 97, 98 to start one of the first BPOs in India, and the other one stayed there. So they were running a BPO operation, which then they sold to somebody else.
What was
to
it called?
That BPO was called Claims Data Processing or something, and it was sold to WNS, right? And these two brothers actually got to know about me and somehow through some connect, they wanted to come back and start a financial services business in India. So they approached and because they had more US experience, no India experience, and not financial services. So they wanted somebody in from the domain. And the three of us, they said, US, this student loan business is this, at that time, in 2007, it was the third largest asset class there with $1.5 trillion of outside. After mortgages and credit cards, this was the third largest asset class. $1.5 trillion of outstanding student loans there, right? While India had four times more the population of students now, right? And total population also. They said there is an opportunity here and why don't we start this? And then I started understanding why is it that education loans don't happen in India. At that time, as against $1.5 trillion outstanding, India had only $3 billion outstanding of students. So it was more than multifold higher, much bigger market than all that. But and then I got into the weeds and I tried to understand why is that when I was in ICICI Bank, we were really aggressively selling home loans, two-wheelers, credit card, personal loans, and you name it, and under the sun, all asset classes, right? We were so aggressive that we were changing policies and launching new products, new technology, processes, everything. And it never occurred to me that there is a need for a student loan. And so I got very intrigued. I started researching and then found out that while there is large demand, nascent demand in India for student loan because the cost of education has been going back forever. And loans are not easy to come by. And then I started asking questions, why is that? Why everything else is very interesting for banks? Because after ICICI, HDFC became very aggressive, Axis became very aggressive, SBI got into the game and they launched those 7% home loan product. None were doing anything on student lending while we are demographically one of the youngest countries in the world. We have large population of students, large pool, aspiring students, middle class families, and they middle class family who understand that education is for their next generation the only way forward, right? So culturally, we were inclined to give education to our best education to our, and best education is started costing now much higher. So this puzzle was very big puzzle, very intriguing, right? Then I got to and then realized when to along with those two, and then we established one NBFC and the NBFC was called and then I started working hard to understand the gaps, the pain point the students were facing, parents were facing, the institutes were facing, banks were facing. This is a portfolio which in banks is the most bleeding portfolio, which by the way is the scenario as of today also. For last 14
What do
years,
you mean
things are
the
not changed.
bleeding portfolio?
meaning it is a very
NPA.
high NPA, very high NPA portfolio. At that time, $3 billion of outstanding was there, as I told you. Today, there are about, I think, 12 or $13 billion of outstanding in last 14 years. It's grown uh, exponentially. However, the NPAs have remained actually. NPA, so out of these 12, $13 billion outstanding, $1 billion are in NPA actually, 6 to 7%. So it continues to be a high NPA business for banks. And then logically, it makes sense that any business where you're losing money and not making profits, you would be wary to do. And then I try to understand why is it that? Why student loans are high NPA? Why does that students get job? It's a growing economy, 7, 8, 10% GDP. Everybody seems to be getting jobs. So why is that? So then I realized what are the pain points. There are issues with the quality of education. There are issues with the bankers not understanding new courses, colleges, their forward employability, and so on and so forth. And how would you underwrite if somebody comes to us loan for a course in university, or then and half of them would not have even heard about program, or somebody comes and asks for a course in India where the university is a deemed university, and so on and so forth, right? So those are the challenges. Then operational challenges for students. So this became, then I realized this is a very unique product or an asset class, which is unique not only in India, but even if you see developed market, this is the only asset class where banks are not the primary largest player. They become largest player eventually after buying portfolio. So there are specialized players in the first Marblehead, Empower Now, and so on and so forth, Prodigy. So then we started solving those problems one by one and started this NBFC as a first specialized student loan company. And then
Quick question here, sorry. Like starting an NBFC is a lengthy process, right? Like to get RBI approval and all takes time.
it's a robust process. It takes anything between 5, 6 months to about 8, 9 months to get a license. And the process is pretty neat in process and all that. Rigor in the process is required also because you're into financial services. And it has implications not only on the customers, and it has implications on the ecosystem. So I would not
And
say it's
you were like one of the co-founders of Credila, like
no,
the
I was the professional
brought in to run it.
brought in to run it, right? So I was the country head, and because both of the brother did not have the experience either of India or the financial services, especially lending. And they were also trying to do it for the first time. But at least I knew lending. I knew collections, I knew underwriting, I knew risk, I knew processes, I know regulations to a large extent. So I was a professional there. So I was the so that's what happened, and then we started that business, and as luck would have it, and because you told me at the start that the founders are there and and they would want to know the journey, very interestingly, as luck would have it, we were very passionate. So I was passionate about education all the time because you can impact lives of people and you are enabling somebody's higher education. So we started building the nuts and bolts, building the product. I spent a lot of time on campuses, slept in messes and hostels and trying to understand, and then started building the product and started hiring people and so on and so forth. Went to RBI and then we got some data and did the first credit scoring. We started on 2007 doing all of these things. And for about a year or so, we built about 40, 50 people team, and we built the systems grounds up because there's nothing like this available, but nobody was doing it. It was very nascent. Only banks were doing it for social reasons. As luck would have it, so I still remember, I think we gave the first loan of some 80,000 rupees to a student in 23rd of March 2008 or something. And just to see whether water flowing in the pipe or not, the systems we have built, the process, whether it's working, the disbursements happening, all of those things, right? And we were very excited, thumping chest. Oh, it went through, and we went, right? So first, and that week, 23rd of March till 31st March, in that week, we must have given some 4 or 5 loans. And on 31st March, Bear Stearns went belly up in New York. And that was the start of the financial crisis of 2008. And in between, while we were doing all of these things, we were very lucky. We got DSP Merrill Lynch as our minority stake equity partner. So they were the partner. And one of the reasons, one of the things which they had agreed with us was not only equity, but they had agreed that we will also participate in giving you debt whenever it is required. And that was very critical because we are entering into a domain which is supposed to be the high risk domain. So unless you prove yourself in next few years, it'll be very difficult for you to generate debt. In lending company, you can't raise debt. You are more or less dead actually. So we wanted that. So we had done that and we were very happy that now we are very passionate about it, done diligently, what business model, all that. And we were pretty confident that we'll succeed. And this happened. And after that 31st of March, I think few days later, Lemon happened, and few days later, Merrill Lynch happened. And Merrill Lynch was the parent of DSP Merrill Lynch, right? Who were our equity fund. So they became Bank of America, and Bank of America.
It was like a distress sale to Bank of America, right? Like,
Yeah, they didn't want to be the part of any retail. Cash was king at that point of time. People were preserving whatever they had and not spreading themselves thin and all that. So that happened, and we were in the first 6 months. Then we had to go back on the street and find another equity partner. The worst time ever. So it's a classic first time founder first time problem question. And even before you started, you're kind of stillborn, right? So and with everything, and I think this is the headwind that anybody could have imagined, right? Envisaged. So your business was more or less done even before it had started.
you only had equity fund still then. You had not raised it.
No, nothing, zero. And that is gone. So we didn't know what to do. And so there were two options. I had an opportunity to go back to corporate world, close the shop, which was anyways getting close to now that you could not have. And both the brothers had back to the VP of business that sold to and starting another venture company. That made they'd done a good job earlier too. All three of us then decided that we'll dig our heels and see through this phase and see if we can get out from the other side. And mind you, one of the toughest times of my life actually, first time, and then you realize that
Must have also hired people, built up a team. And
yeah,
all
about
that.
40, 50 people.
Wow.
Then every month there was a payroll coming. So classic roller coaster, as they call it in startup world, right? And none of your fault. You've done whatever right you could do with a lot of care and diligence. But this is what happens when classic. But also when we met a lot of private equity people and all that. One of the meetings were with HDFC team, Mr. Parekh. And he is very passionate about education, and even during that time, he is such a visionary person. That's why he is what he is, right? And that's why HDFC is what HDFC is because he could see the potential of the business. He could see the business model that we had built, and he was obviously passionate about education. So he said, "I will." So he agreed to then participate and took that minority stake from it and started putting money. And as they say, rest is history. And we look back and we started growing very fast. And I was there for about 5-6 more years. After that, his country had we grew the business, made it profitable. And then,
Was it as an HDFC subsidiary then? Like they
it is
acquired
now
it, basically.
Yeah. So they acquired the small stake and they let us speak. We started building the business again as we had planned. Now
And
that
they
we had-
gave you debt so that you could grow your loan book.
No, then so what happened was that after you got that name, then and you started showing growth and the seasoning and portfolio was also performing. In fact, one of the notable things which I'm very proud of is that in those 7-8 years of my being with that company right from the scratch and building it from zero, the portfolio for 14 years they never crossed 0.1% in NPA. 0.1% in an industry which is fraught with NPA 6 to 7%. In that industry, it's for 14 years that company never crossed 0.1% of NPA. They have a 10,000 crore book now. Their NPA is just slightly more, but I think it is still not crossed, I think,
So what's the secret behind that? How did you
So
achieve
all
this?
the hard work that and research we had done, we listed painstakingly every course, every university, ranking, potential employability, sector-wise employability. If the student comes from, we can, we could pretty much actually profess or predict the trajectory of any student with different combinations. Somebody has done, let's say, mechanical engineering in pretty engineering college, and now 3, 4, 5 options. They could go to MS in US, they could do an MBA in India, they could join their own family business, they can actually do MTech, they can do start their own business. We could now in Kuhoo actually we have developed on that market model, but we started there. We could predict what is going to happen because we knew exactly which course, which university, which college, which potential employability, if they're doing for STEM, if they're doing computer science, if they're doing data science. So that work actually a lot of research is called.
And you were doing both domestic education and study abroad.
Yeah, at that time, study abroad is where we started because that was larger ticket demand was higher and all that. Over the years, because of that reason, they continue to still focus on abroad education. While I am focusing more in India now, because I think that problem for abroad has been solved more or less.
Yeah,
There
there
is
are a lot
a
of companies
yes
like
now.
that.
And banks also become more lenient after seeing Credila's success and all that. There's an empirical data available of 40, 15 years of almost no default of if you do the underwriting risk management operations, right, then you don't, people don't default. They realize that. So there is now availability of loans there. But India is much larger market according to me, and engineering, MBA, coaching classes, executive education, tech, vocational. There's so many where exactly the same problem which I was trying to solve for abroad in 2007, 8, 9, 10, 11. Now we are trying to do that in with.
At Credila, basically, you first had a curated set of colleges, and for each college, you had data like average salaries. And
Yeah.
for the US market, this data would be readily available.
Yeah.
And
Other
based on
market also.
US, Australia, like most of these developed
European,
economies
yeah.
would have this data. And based on that, there would be a decision on whether to lend or not. And
Right.
you would not lend if the college was not so credible or the
Yeah.
expected jump in salary was not
Yeah,
substantial.
absolutely. What
Yeah.
you likely at higher premium or you
Mm.
would like lower amount? Sorry,
Right.
there's a different combination.
And what about what part of preventing NPIs at the time of giving the loan, where you do the risk underwriting? What about at the time when the money becomes payable, like once the student graduates?
Yeah, so look, the one of the things we learned, and this is a trade secret I'm giving on your podcast for the first time, is look, one of the things risk management student loan is also managing the transition of students from campus to corporate. So even if there is an intent and ability, both of students, so intent is good, student wants to repay, and also because they've now earned a good degree qualification, graduated, they will be able to pay because they're getting good job. However, the, the transition is where the vulnerability is. They're the most vulnerable because invariably you expected that if you're joining a course in India or abroad and you think you will get $100,000 job, but you got $50,000 job or $60,000. And so your planning goes haywire. Here it's more pronounced because it is not dollar to rupee conversion. Here it is. You wanted a 10 lakh rupees job from campus and you got a 6 lakh rupees job campus, and suddenly everything is. Uh, so I think so if you, as a lender, if you manage this even if you've done that underwriting right and you have pegged the course, employability, future salary and all that, this transition, because India, financial literacy in young people generally is slightly lower than relatively others. But especially young people, because we all get in middle class families, we get raised in a protected environment. You're not exposed to finances of the family or budgeting or all of those things, right? Personal finance, that's why is a big.
There's no such thing as earning your pocket money, which
Yeah. So on campus, even the best students do not have the appreciation of financial discipline or literacy. They do not know enough. And B, there is a discipline issue. They don't appreciate that if I don't repay my loan, it will be very difficult for me, especially abroad, where buying a loaf of bread also, you should do it on a credit card and you will not get a credit card and other products and all that. So bureau scores and all those things. So sensitivity to that is missing. So you manage that. A lot of customer evangelization and education was required, and we're doing that, right? And that's what, so one of the reasons, other than the product processes, technology, and all of those things and rigor in operation, we were also doing a lot of customer education, and that actually contributed to lower NPAs and all of those things. So that transition, if you manage well, that because they will leave job, if they get a job from campus, they will leave one city, join some other city. From there, they will leave that job and join some other company and go to some. So managing this transition and mobility for 10 years, which is normally the tenor of the loan, is really difficult for an inbound branch model for any bank. Unless you are tech enabled, your processes are very flexible and you are nimble footed, it becomes very difficult to manage. So those are the things.
Like you would have an account manager who would call a student and like when
So
you are about
both.
to graduate.
So servicing system, once they graduate, that is the servicing system, and may not be only account management. It started exactly like the way you are saying, but then we graduated to make it more people independent.
Okay.
So we did
Like
not have, so
email
like
and SMS.
email SMS auto driven, and you could call a number and check. And now here,
And you give them the flexibility that in case they want to reduce the payment, the monthly installment, they can.
at that time, we were doing it more selectively. Now, with tech and all that, and Kuhoo, all of these options are now on the click of the button. Right? This is what I built, right? So you could self-manage your because you want some bonus or something. All of these things, they'll be able to do it on an app or a web.
Got it. Interesting. So why did you leave Credila? Like you were, in a way, like heading the business, growing it from 0 to 1 and put everything
Yeah.
startup.
So, no, it was a startup. It had become with HDFC, and HDFC, yeah, I was enjoying myself. We were growing. We became profitable very fast, and we had the best cost income ratio, as is HDFC's hallmark actually.
What
That
is
made
cost income ratio? What does that mean?
So in lending, one of the best matrices or metrics that every investor, analyst, or banker worth its salt looks at, its cost income ratio. So your income is your NIM, fees, and all of those things, and minus NPA goes up, and then
NIM?
net interest margin and all that. So what is you are charging, let's say 15% rate of interest, what is your cost of operation, NP, and all of those things. So what is the spread and then net interest margin? So that's your income, right? And then what is the cost? So at what cost if HDFC spends 100 rupees for doing X amount of business, what is the profit they generate? And if say 100 rupees being spent by some other people for same amount of business, what is the cost? And that HDFC is the best in the business then. So we were running a very tight operation, very good. So all of those things, and it became a very successful.
And in this, a little bit more I want to ask on cost income. So in this cost income, the cost is say the payroll, the technology, or
everything, all kinds of
all the costs of the company,
OpEx,
right.
OpEx.
Okay.
So
and
leverage
this margin will be high if you are able to get funds at a lower cost, which like a bank like HDFC.
So cost of fund. Cost of fund is one, but cost of operations becomes that key, because cost of fund for similar players will be more or less similar. For SBI went to the lowest, and HDFC. So there will be some difference, but there is a cost of fund arbitrage, but the cost of operation is where the game is. So if same number of people can do more business, and same number of branches can do more business and more high quality business, and keeping the NPS low, then obviously you are more profitable than anybody else. And that's what HDFC has been able to do for so many years, and that's why they trade much higher than anybody else. So I was doing all of those things. I was enjoying myself. It had become a very large operation, and then I realized that over the 7-8 years, it became more or less a large corporate role again in a large bank, right? And I got my taste of the blood of entrepreneurship.
Right.
So I was itching to do something. So I joined a startup based out of Bangalore, a tech startup actually. I wanted to see tech had just started happening, coming out of the shackles, and in India and Bangalore obviously has been the startup capital. Joined a very interesting, innovative platform company called Wooker, and as a president, the founder is a very exciting guy, and then grew that business, B2B business.
Help me understand what was the product that they were
The
building.
product was a tech platform which is given to all the large corporates, medium corporates, and small businesses to run their
Like a project management software.
So it was a very interesting thing. So it is a combination of project management, workflow management, processes, knowledge management. Actually, it is something very similar to Slack if you use Slack to Slackness. So very interesting,
like a
very
Slack,
innovative.
Salesforce kind of a.
Yeah, exactly. Same. Plus, so it was good and very exciting front. And then
And this was like made in India for the world kind of.
Made in India for the world, right? So we did for the launched in US, Dubai. It's still running company. And then I got the first-hand experience of how the tech world operates, right? B2B tech as few hundred people to 50 high-profile techies, and handling them and working with them, building the product, and fantastic experience. Intellectually very intense, and also different selling experience, different deal, all that. So we launched in London, we launched in Dubai, we launched in US, we launched in India. We had already built a profitable business, and I was there for about 2.5 years or so, and about 150 large, medium corporates, and so that was a good model. And then I got in touch with Underwrite, who is the founder of Incred. Actually, is part of Anshu Jain's DB team. Incred, he one of the investment bankers called Bhupinder Singh. He was in Singapore in Deutsche Bank, and London and Singapore, 16, 17 years of Deutsche Bank. He came to India. He wanted to start financial services business on his own. And so he got in touch with me and said, this is what I'm planning, and why don't you, let's do it together as a co-founder and all that. So I said, what are you planning? Then I was enjoying my tech journey, and I said, no, I'm not interested. And then we quoted for about 9-10 months, and then finally could convince us that we come back to home, which is financial services. This is where action is. And you seem to have the right combination of large corporate financial services and tech. And then, so this is what we want to build in the fintech, right? So why don't we do it together? So I joined as the retail finance person on the table, and started with him, started building that company. I've spent about 5 years. So
this was like a lending focus, like they had an
lending. They are an NBFC. They are now they merged with KKR, so it's a Incred finance, large one now. They have about, I think, more than 5,000 crores of balance sheet. I spent 5 years from zero again. So this was my third startup gig from Credila to this tech thing, and then Incred. So I spent 5 years right from zero, equity, direct.
And what products were you building there? Like
home loans. There's a separate company as the MD and CEO for home loans. We built very quickly. I built a team of 200 people, and I think 300 crores of portfolio in about 2 years, affordable housing, and then sold it to IDFC Bank. And then I was also responsible for.
And each of these was a separate NBFC, like the home loan business was.
No, a home loan, because home loan license happens separately, so that was separate. But all other businesses happened under one NBFC license, which is your student lending was one of the verticals as lending, then personal loans and two-wheeler loans and so on. So I did that for a long time, and for about 5 years. And then Kuhoo happened, and with Westbridge Capital, we decided that it's high time that we build the tech version and analytics-driven version of what we built in Credila and Incred and all that, right? So that was by design very analog model, because nobody would give us during that time. The 2007 to 14 is not the best time for tech and so on. For that also, we had entered into a domain which was seen as very risky. So nobody would have actually given us any chance if it said that we are building a tech company in a 6%. We had to show that we are doing everything diligently. So we built an analog model by design, and that became successful. So for good or for bad, the new players, whoever followed suit, followed exactly the same model. They got fairly successful. Right. So there was a need for a business which is now driven by the intelligence and domain expertise which had built over 14, 15 years. Use that and translate it into models that is world class in terms of product innovation, in terms of technology, data science, all of those things.
You've set up lending businesses. Tell me that 0 to 1 journey of setting up a lending business, and you can weave that in with how you did that for Kuhoo also.
Yeah. Look, one of the according to me, lending business is one of the easiest and one of the most difficult businesses to do. Easiest from the business point of view because there's always going to be a demand for lending.
You don't have to
It's easy.
to find customers.
Yeah, it is easy to give money, right?
Yeah.
One of the most difficult business things because once you've given money, it's the most difficult thing to get it back on time and the way you want to get it with interest. And all those things. This is 0 to 1 journey that, look, one of the few things that I've learned was this thing in lending business right from the beginning, and we were taught by the right people. I got lucky, right mentors, and good systems. ICICI Bank was an amazing system of technology and how to leverage it. And but most importantly, look, lending business. What I've learned or understood is lending business is the business of taking risk. Right? Every loan you give, you take risk. And I've seen a lot of businesses, good founders, good product, good companies, good funding, but struggle in lending because if you take good risk, you make money. It's as simple as that. If you take bad risk, you lose money. And so, lending business, if you can manage risk well, you understand risk, nuances of risk, you have framework of managing risk well, you have resilience and tenacity to adhere to that framework and not cut corners when things go south or when things are tough. Hey, not everybody who does the process, does the framework, not everybody who knows and is successful. So knowledge is not enough. You need to have the tenacity, resilience, faith in the process, and staying true to what you had decided, correct? These are some of the fundamentals that might sound cliche, but in lending business, no words were more true. Correct. This is what I've learned that once you do thorough research, understand the nooks and corner of our risk. For example, in just to give you an example, student loan, the only risk is not the whether I give this money, whether this guy will or girl will give me the money back or not. That's not the only risk. The risk is as as wide as geopolitical risk. For example, if you're lending a course in US and it impacts your portfolio whether Trump is there the president or Biden is the president or somebody else is president, right? So those kind of things. And just making for the effect I'm saying, but it does have.
Or like say
Because
Ukraine, because Ukraine has a lot of these institutes where people go for an MBBS.
Medical, right? And for example, when we were lending in 2008, 9, 10, I was making the policy, writing policy processes. That document still has that we will not do medical loans to China, Russia, Ukraine. It's still written, 2008.
Why? So, like because of the risk there, or like you would
risk there because
it will be accepted in India, the degree.
Yes, that was the main risk, right? That even if you pass out from there, doing a medical profession there and abroad is more difficult and challenging than India because the legal and consumer laws and all of those things. So that risk you run. Second, and there are different exams which are tougher to pass if you really want to practice there or get a job and all that. It's not only passing out. And if you want to come back, will not allow you to practice unless you go through process, and most of them will not pass in the first place. Otherwise, they won't have gone there.
Yeah,
yeah, right. So those are the challenges. So those risks, if you understand the nuances of risk well, right, I think you will do well. Second, most important thing, which is very underrated in lending business, 0 to 1, You must either know or get competence if you don't know yourself. Competence of connection. It's a different skill set, right? And it is not only going out, knocking on the door, being harsh. It is also a process. How do you do soft calling? What are the matrices to follow, so on and so forth. And no, the new lenders who do not have experience, especially the some of the fintech ones, they do not understand the importance of connecting money is a rigorous process, right? And you need to have that skill. So those are the things that I've learned over the period of time and which seems to be helping us now. Other than that, I think knowing the cost of compliance and governance is other thing which is underrated, right? So knowing regulations, because retail finance, if you are getting into retail finance, right? Retail finance is a thin margin, high volume, transaction heavy business. NPS, as I said, NPS is not the credit cost is not the only cost, right? OPEX, cost of acquisition, but cost of compliance and governance. If you take wrong turn knowingly or unknowingly, it may well be the end of your road actually, because it's heavily regulated business, right? So you are putting investors' money at risk. Just knowing compliance and the lay of the land and regulation is very important. Those are the few of the things I think. Other than that, I think it's a great business to be in because your financial inclusion in a developing country change lives and you have large impact, right? So it's a very fulfilling business also. For example, especially education. So those are the things which I've done.
So let me zoom in on these things, each of these. So you said risk, connections, and compliance. These are like three key things to get right in your 0 to 1
Correct.
journey.
Correct.
So how did you get risk right at Kuhoo? Because now you're focusing on domestic lending. At Credila, you were doing international lending. So with foreign universities, you have, say, average salary data. You have maybe some ranking data and things like that. There's a lot more transparency with respect to education quality, etc. There. Now, how did you do that for India? Tell me about how you built your risk engine, your decision making engine.
Yeah. So look, in US also, while the data is relatively easily available, but you do need to find out the right sources and whether they're authentic sources or not, and so on and so forth. There is a lot of legwork there as well, right? So the nature of the work does not change. You need to do the similar kind of legwork, maybe a little more than why I had to do it in the first 4 or 5 years of well. But here, exactly same. Here you have NIRF's ranking for engineering. You have a few other ranking for MBA colleges. You have so then you start understanding if it is a partnership business with edtechs, then you understand counterparty risk. So then there are public domain data available of whether the edtech is good edtech or not. And it's not only a product, but the company will survive if you have given loan to the dead students and so on and so forth. With some of the edtech companies have gone bust and which has impacted the lenders because of that, right? So those are the risks you understand. So my answer to you, more specific answer, Akshay, is that it is a lot of hard work and legwork and research. And one of the first things which I did about a year and a half back when I started on this journey is, and we have been doing, in fact, I've been doing this for a while, when I was in Incred, we were looking at those spaces. And when I was in Credila also, we would look at research of vocational courses, and I was personally involved in that as on some of the panels and stuff like that. So the work has been happening for years now. And all of that is culminating now, and I'm more focused on, let's say, engineering. So, which rankings to use, that the data has integrity or not, and so on and so forth, and put your feet on the ground or get some agency which is more authentic and so on and so forth. So those are the things happening as far as data is concerned. So we have a lot of work, lot of information and knowledge there.
And what were the
Then-
fields that you collected for each college? Like income, employment
yeah.
fields?
So background of college when got established from that point, that how because education also is such a education, not education as a business. The more time you spend, the better it is, right? It is a business of high touch business. So that's why trust takes a longer time to build. Harvard is a Harvard because it took 100 years for them to reach. So right from the year they got established, who are the faculty, who are the founders, how many years the faculties are spending there, whether faculties are coming out with research papers or not, what is the pedagogy, curriculum, modus operandi, infrastructure. A lot of these parameters, anyways, are part of the ranking parameters. A lot of agencies have RB and all of those things, right? So we use that. How we also use the data industry on this side, on the right side, we also do industry mapping work, which industry has higher potential or demand for professionals for particular category. Correct. For example, in US, you have high demand for next at least 5, 7, 10 years for STEM graduates. Right? Large demand, less supply. So it is going to continue for a while. Similarly, we are mapping for India. So which engineering stream, other than which is the most obvious of computer science and IT, which are the other engineering streams which have potential to get better and higher paying jobs? So those are the things on the industry side we do, and that we do the matchmaking and so on and so forth. So those are the things which we are collecting and stuff. Then there is a whole lot of data around the student and their profile. So past acads. For example, if somebody is in IT Bombay and 9.7 CGPA, obviously has a much better opportunity to get into a great college, and because of that, great job and so on and so forth, right? So past acads and how many backlogs they have. We have going to the extent of now analyzing entrance stress scores slicing. For example, somebody is given GRE or CAT or GMAT or TOEFL or IELTS. What score has a higher potential of impacting what risk, right? So those are the things. So, for example, great score on quant, less score on verbal may also mean that they might find it difficult in the soft skill sections to get a better job. Correct. So those are the correlations that we have started making.
These are like self-declarations. The student declares what was his score and
We have to take as a part of the documentation process, we take this course. And a lot of these now are digitally available. So it's not so much of in earlier days that you need to give documentation. We can pull this course from a lot of sources. So those are the things which you need.
And the decision is a mix of potential of the student and potential of the course.
Potential of the student. And we have converted that into a proprietary credit score actually. So that's why every student gets a credit score. Based on score.
You can't rely on the traditional credit score because students would to credit. They will not.
Exactly.
So what about parents' credit score? Does that factor in?
Yeah, initially over the years, the weightage has come down, especially for our school. A lot of other lenders still actually take either the collateral or parents' income as the main criteria for giving a loan, even the student, because they don't have the kind of finesse and the data analytics and the knowledge base there. But for us, over the period of time, we have been able to reduce the dependence on parents. So parents now we are taking more for A, psychological reason, and B, for contactability purpose.
Oh, so you're in a way enabling more social mobility. Like kids born to poor parents have as much of a chance as a kid born to a wealthy parent.
In fact, a lot of students that we have funded in our pilot actually come from the humble backgrounds. They wouldn't have got, meaning we funded a few students who are actually the construction labor and house helps and all of those.
And tell me about your collections process. What have you built over there in terms of being a agile, nimble, tech-enabled collections process?
So we have, so it's not only collection starts for us with early warning signals on the portfolio. So because we have so much of data around the application data.
Does the student remain engaged with Kuhoo after he gets a loan? What's the student journey? First, tell me that, and then we can.
The students either finds us out, or we reach out to through campus catchments or through digital medium and all that, and then students
postgraduate courses.
Largely postgraduate. We are also doing some product innovation on engineering. For example, we've launched the first mid-course financing product in India. So if you have done 2 years in third and fourth year, there is a product specifically available. So those are things are also available. But coming back to the
And also online courses like edtech courses, say learning,
Yes, yes.
upgrade, these kind of courses also you would.
all those, yeah. So if the student either comes to directly through digital mediums or through a partner or through referrals, whichever way they come and apply, give us on an online link, give us, and there's a student app that we have built, which is getting released in next couple of weeks, and they'll be able to download. The very unique thing about that we have built in India is the students can find out very quickly after giving a few data points whether they are eligible or not, how much they are eligible for, and what kind of broad loan amount and NR and rates. And that, I think, for that, so my understanding last 15 years is students and parents, when they're doing the education planning for the kids, and the students, when they're doing it for themselves, they need quick answers to two fundamental questions. A, whether I'll get a loan or not, I don't know. And if at all I am going to get a loan, how much am I going to get? And these two questions in Indian system right now also takes anything between few days to a few weeks. So you go and apply, and they'll ask you for documents, and then they'll process it, and then come back and tell you, oh, nee, it is not possible or whatsoever. That we have converted into a eligibility check very quickly. There is a decision engine runs, right? So that solves a lot of problems for students, because then they are now clear what is the next route to step to take. So that is the journey. They can check their eligibility very quickly, and that they will get options. If they want a little more loan, then what are the options? They will get it on the journey. If they want a little less loan, what is the journey? So on and so forth. They can kind of make their own loan. So that is the journey.
Parent can have some collateral option to get more loan.
Correct. If they are willing to give it largely. But our fundamental philosophy or guiding principle, Akshay, has been that I'm on a mission to make Indian students completely Atmanirbhar. So meaning because I have knowledge, Kuhoo has knowledge about which stores, which student, which and all that. I can leverage that, and then not give as much importance to parents as the other banks. So I am allowing them to become self-sufficient or self-reliant. The other thing which I've noted over the years is Indian students, we all come from middle class. So they have a sense of commitment and to their parents and families. Right? They know that their parents have sacrificed a lot for them to reach wherever they've reached, the students, right? And given a chance, they would want to now take their own responsibility, especially for their postgraduate and all. So there is a sense I want to give them a chance to be able to do that. And you can do that if you understand what students, you can tell them, this is a good course, I like this course, please go ahead and do it. I think you would do well, and also and so. Right? So that is the journey. That is the philosophy. That is the journey. We have actually enabled this journey completely automated. So they don't have to come to any branch. They can do it online. They can check the status online. And now with the student mobile app coming, they can actually do all of these things on the mobile.
And so how does the loan get dispersed? They need to show some proof that they have received admission, they have secured admission.
Yeah. So the we fund tuition fee as well as living expenses. And the tuition fee will be dispersed directly to the university.
Oh, so you have these tie-ups with all of these universities.
Yeah. So based on their disbursement, so the loan gets sanctioned for the entire course, but the fee payment schedule के हिसाब से they will disperse. So if the first semester fees, let's say your section, let's say 10 lakh rupees, and the first sem fees is, let's say 2.5 lakh rupees loaded. So the living expenses will go to students, which is normally about 20-25% of the whole loan amount. And the tuition fee will go to the student. This is how it will get. But this will happen all online.
And the fee payment is automated. You directly have a relationship with the college or the student.
You don't have to be. In some universities, student shares the account details. And once you've done it for one student for a university, then
the account details are entered. You can verify next time someone shares it. And if you have a lot of students from the same college, then somebody can do a partnership with them.
Correct. Yeah.
Got it. Got it. And the dispersal is like on a, like for every semester, the student gets living expenses at the beginning of the semester. It's not like single
Yeah.
time disbursement.
No, single time. No, it is not single time disbursement. As in when the demand of the money is there by the student and this institute, so it will be disbursed like that. But sanction has happened earlier.
Is it on demand? Like I can take just 1,000 rupees today.
Yes, of course.
Oh,
Yeah,
okay.
yeah, of course. If you want less also, you got 10 lakh rupees as sanction, your fees is due for 2.5, but you only want 1 lakh rupees, we'll disburse you 1 lakh.
Oh, interesting. So this way, then he is engaged with you throughout his education. It's not like a
Throughout
total
the education.
expert. And,
Why? It is
Okay.
what? In fact, in some cases, we do ask for how are you doing, CGPA certificate of your course progress and all of those things. So we are engaged there. Some of the students actually do come back and ask for some help in internships and project and so on. So we can help them with that as well sometimes.
And like you like, how do you make sure that they've passed out, that they're not flunking, etc.? Like you're sending them a notification asking them for details.
Yeah. So look, you have done invariably 99% of the times your original underwriting is being so rigorous that these are the kind of students don't flunk. One. So even in those very rare cases, if something like this happens, we are engaged and students also, because they know, we keep telling them, like I told you, like evangelizing, educating. If anything goes wrong with you, please do inform so that it can take care of. So the student comes back sometimes, or sometimes we reach out and we know exactly, look, if somebody is going for, let's say, a fall of this season, right? We know exactly when are they supposed to pass out, right? Before their passing out date or month, our team starts following them up. Email goes, SMS goes, call goes. That how's it going? When are you getting on-campus job has happened or not? If not, then what is? So we have the data, right? We just need to put it in the process, and that's what we've done. And now the tech has made it easy. The notifications go to student. The app can send the notification.
But then once they get a job, then they work out a repayment plan. That also is self-service.
Yeah. So that
Just
they can do
Okay.
it. There is a plan already at the time of disbursement. If
Hmm.
they want to change it, they can over the period
Okay.
of time.
Hmm. And you take NACH, that NACH mandate.
Match it, yeah.
Okay,
Absolutely.
got it. So this covers how you do your collections through multiple touch points and the
Yeah,
NACH
multiple
mandate
touch
and giving them flexibility to restructures as and when needed. Got it. What is your way to meet that cost income target? You must have some cost income
No.
target.
So it's still early days action. I think we need to go the whole hog and how it plays out and something like that. I'm very happy and pleased the way it is right now panning out. Look, my philosophy again has been that in financial services in India, if you are solving any problem, whether it is for students or banks or for ourselves, our own balance sheet, or anybody for institute, there is now a possibility to solve that problem through tech. Correct? There is a very distinct possibility. Almost everything can be solved. It's only you need to have the right talent, approach, and intent to be able to find and create a right product for flow and all. So my philosophy has been, and this is what I've told my leadership team, very powerful, very high profile leadership team I've been able to hire. I think the approach is that if you are solving a problem, first get me a tech solution to that. It has been a legacy thing in India because of cheap labor that if you have a problem, throw people at it. Whether it is distribution also, if you want to solve, let's say, customer onboarding or acquisition, you will say, I'll recruit a DSA and DSA will hire 4 people, or I'll hire 10 people, 100 people, 1,000 people team, and then go and collect documents from the street. Right? My sense is that my approach is that why do we need this? A student has the documents, they have on their fingertips their mobile and whatever, and they want the loan and they are very keen to share information because this is in their favor. And just allow them to do it seamlessly. And if you do that, you have actually eliminated a lot of costs. So one big cost in retail finance, because it's a people intensive business, is people.
Like
One can
customer
solve
acquisition, like that.
customer acquisition, even processing actually. Once the file comes,
Mm.
the credit processing,
But
because
processing over the last few years has become pretty automated, right? Like even bank
no,
process.
not for
Huh?
no, not for. It has become automated for credit cards and personal loans to a large extent actually, because those are smaller loans, and credit card is pretty much given to people who are known in the financial system, who have that bureau score and all that. In this, for example, mortgages, it's not as easy as a personal loan because of obviously property documents and so on. There is a lot of processing which happens at the back end, whether the property papers are original, whether the property papers are right, that the link documents are there. And similarly, in student loans also, there's a lot of processing with the existing lenders. What we've done is we've automated that as well. So we've done DigiLockers. We are extracting information, so on and so forth. So to a large extent, we are kind of innovating at the backend processing as well. So for example, a lot of information A gets collected and then B gets processed. So application information, past acad information, futures information, which college, which course, admission, I-20, visa, all of those things, and so on and so forth, right? All this information needs to get processed. Now, this information right now with other lenders are getting processed largely physically. Meaning they need to download the document, somebody needs to sit and find out and so on. This we have kind of automated again. So,
Okay, so you're using like computer vision to scan the document.
something like, yeah. In fact, student also can actually take pictures and documents, upload document in the journey and all of those things instead of sending it on email or WhatsApp, which is by definition called as a digital journey. But according to me, it's not digital journey because you are attaching document and sending an email. So those are the things which are changing.
The document verification is also done through computer vision, like whether it's whether the admission has been granted, whether the visa is
granted or not. So those are the things which are.
Like it's able to parse what is the date of validity and so on and so forth, all of that.
Some of it has already happened as a standard, which, for example, bank statements are now pretty much standard parsing and all those, right? But some of the other academic documents, and especially in this domain, is not happening so far. So this is the unique thing which we have.
So you've created you've built that ability in house to read mark sheets. Like your system can read a mark sheet and translate that into numbers, and then
work in
numbers
progress
can feed the algorithm.
Yeah.
Amazing. And how did you cut your customer acquisition costs? How do you get leads?
Get the customers, right? Fortunately, we are in a business where the customer is the most internet and social media customer that you can ever ask for, right? They are there. Whosoever is either going or studying right now, they're in some of the other virtual site. As long as you know the customer and their life cycle. So we've mapped anybody who's going to US, anybody who's studying in India or planning to study in India. We have mapped backwards about 24 months, forward about 30, 40, 36, 48 months, 60 months, right? So you know exactly at what point of time the customer is doing what, and then you can go and so that knowledge is more important. While digital sourcing can be very costly and is very costly for a lot of people because they don't know where the customer is, right? So they are, I think, shooting in the dark and going to Google and search and all those and keywords and stuff. But if you know exactly what that student is doing at what point of time, there is a catchment. We do a lot of webinars actually, where we tell people 5 things you need to know about this, finance, 10 things you need to know about visa, 7 things you're not to. So those are the things. So catchment, go to campuses and understand the pain points there. So institutes need to collect fees and it gets delayed and all that. So can we send and partner with them and they can send the emails? So those are the things.
And what percentage of your leads come through institute tie-ups? Say, if I'm applying for admission to Amity and
partnership, not only
directly.
Partnership is a channel, and within partnership, universities, institutes, and colleges are there. And within partnership, there are, for example, test prep centers. If somebody is going out or in it, so you partner with them. So within partnership, there are student tech companies or discussion forums and all that. Right?
Like this
So you partner with
guy or Those
something in it, right? So those kind of people, because it's enabling complementing product for them also. Correct. So partnership is a big channel, and then you go and partner with them, and they move forward. Digital is one channel, digital social media, and then referral is a very strong channel because students usually work in cohort. One of my friends, I am going, so my four of my friends also will do the same. And if I got a good experience and a good product, then I will invariably tell the other people. So referral is a very strong channel.
And do you do something to drive more referral, like giving some benefits?
I do, yeah. We do some, it's again work in progress, continuously getting evolved. But yeah, we do some vouchers, Amazon vouchers, and some gadgets, and so on and so forth for good reference and converted.
Okay. How did you get it off the ground in terms of funds? You need funds before you can
I
get
got,
out.
yeah,
Mm.
I got very lucky actually. I got an investor, which is one of the largest private equity funds in the world called Westbridge Capital. And Westbridge Capital now, if I'm not wrong, about $8 to $9 billion fund. They have invested as seed about $20 million in Kuhoo, one of the largest seed fund funding in last 2 years in India. So I got lucky. I had great investors, understand India. They know education. They're very keen on education as a space and financial services. They're investors into Equitas, some of the very good companies, Star Health, Insurance, and all that. So they've invested into Kuhoo. So I got.
And that because of your credibility at multiple, setting up multiple lending business.
I would like to believe that, yeah. Yeah.
And what about debt funding? Have you?
I right now not required. Yeah,
You have a
just
$20 million
dollars.
in the bank. You don't need.
Right now we don't. Over the period of next about a year or so we'll need it, but I guess same thing. I think if not anything. I've got a little bit of credibility in this space and proven track record, so it should be not as difficult. It's always difficult for a new player, but shouldn't be as difficult as it may be for others.
What has been the traction so far? What is your loan book, or how many loans do you
Look,
disburse every
we
month?
just started lending as pilot. We are still building out our loan origination system, student mobile app. So tech is getting built out, but we did do, and our RBI license is in process in next couple of months. So we have tied up in BFC to use just to check the pilot and all that. So
make sure the
pipes are working. And so just some numbers, actually, we've got in about 6 odd months, we've got about close to 10,000 people who approached us showing interest. More than 3,000 people have given us the entire document and papers, KYC, plans, and all that. And we've sanctioned close to about 80 crores or something, and disbursed already about 15 odd crores. And so this is the journey in last about 5-6 months.
Amazing. Do you see this being largely domestic lending, like for domestic?
We will do this strategy. My focus is on domestic courses. However, because as a brand, I want to be the one-stop solution for any Indian student who's planning education finance, right? So to that extent, we will offer all the entire product suite, which includes Indian students going abroad. In fact, right now, largely the lending has been to abroad because the season was for. But going forward, my focus more and more is going to be on Indian MBA, engineering, small ticket certification courses, that tech, executive education, and so on and so forth. This is where the focus, because that's where the large need also.
There could be an interesting play on this user base of students who are like starting their career. You could, for example, be the place from where they get their first credit card once they get into a job. So are you looking at building out those other products to cross-sell and upsell to the same audience?
You stolen my thunder. No, but yeah, of course. Look, we have, this is to be more on serious note. This is invariably the first serious financial product in our student life. And by the virtue of the product, the nature of the product, we acquire customers pretty early in their life, right? Anything between, depending on which segment you're addressing, if you're addressing Get Well, which we are not right now, but 16 to 24 or so, right? So invariably the first product, and this is a very emotional product for them. So the bonding is much better, entrenched process, right? So there is a relationship bond, right? Now, and I know exactly because of last 15 years of experience, what are the other product at what point of time they will need. Once they pass out, if they're abroad, they will need a credit card, as you rightly said. In India, they might need a small ticket personal loan for paying deposit or buying a two-wheeler or bike or something, right? So these products we've already mapped. We know exactly what they will need over the period of years. So we have mapped about they will anybody, you, me, anybody will work for 35, 40 years in that, right? First 10 years is this, and then next 10 years and next. And our tech architecture is such that we'll be able to maintain, leverage this relationship funnel that we have created and use tech and analytics. Our analytic engine is very rich, as we have spoken about data science team working at it and all that. So we'll be able to predict all of these things at the right time, right place. So we will have all the infrastructure readiness for this. At what point of time will depend on macro conditions, micro other things, how compared, what are we at that stage in terms of scale operations and so on and so forth. But yeah, largely at 30,000 feet above, I would like to be more engaged with students and
Right.
facilitate more products to them as much as I.
Would you do this on your own books? Say a two-wheeler loan, which would, I guess, be the.
No, I as of now it's too early.
You would do
to
this
say
through
anything,
partnerships.
largely that because I want to be focused on what I do the best, right? I know this business deeply and we want to leverage the domain expertise and be focused. And this is a very large opportunity and fairly underserved. So for next lot of years, if we are doing the right things and we are doing everything that needs to be done in this segment, I think we have enough and more market opportunity to not look outside and become the best, better than the best player that there could be in India, right? And then probably global because the domain expertise, tech, talent, all of those things. So, um, strategic priorities or compulsions notwithstanding future, I would want to stick to the core competence that you built.
So through relationships, you could even do things like selling upskilling courses. Like somebody's
Yeah.
done a comp science engineering, maybe sell them a product management course from NEdTech, which could give you additional.
Or the possibilities are almost endless, actually, Akshay. But for example, career counseling, right? We have so much of data and information and knowledge about courses. And there is an information asymmetry, right? Where students wants to do something, they don't know what is the right thing for them particularly. But those are different business lines. I want to focus on one business right now, but of course the possibilities are endless. Once we have a traction, business running as usual, there is a scale and profitability, then we can start thinking of diversification over the period of a year.
And are you planning stuff around keeping that relationship stickier, that they're more in touch with you, say some sort of
Absolutely.
like a community on the app where they can talk to each other or
Already built. Yes, yes.
Okay, okay.
Or
Job
there's a
listings of
discussion
the app.
forum, job list, internship projects and so on. They
Right,
can
right,
talk to each other. There's a community section on our app, which is well built actually.
So they can talk to alumni of colleges where they want to apply. And
We can build. They can share their stories and they can share their learnings and so on.
Interesting. Oh, cool. So what's like a broad 30,000 feet above the ground kind of a target in the next couple of years that you have it?
Not next couple of years. Let me give you a slightly longer version because I'm building this company further, if I may. Look, in my so Credila took about 12 to 14 years to build a $1 billion book, right? I think we will be able to do it in 50-60% of that time. Yeah. So that's a broad range of where we can go. Right?
And how many student loan companies are like a $1 billion plus in terms of their book?
In India, private players, nobody except for Credila.
Oh, wow. Amazing. Amazing. Amazing.